Good morning, trading world. Today is a big day, and all week price action has been saying so. Monday we closed right around where we started the week at. Tuesday, despite getting a big push up, we still came back and closed near where we started the week. Both price action and implied volatility say we are not doing anything until the FOMC. At the beginning of the week, the probabilities stood at 59% probability of a 25 basis point cut versus a 41% probability of doing nothing. And as you can see today, 5 hours and 45 minutes until the announcement, we are at 65% probability of cutting 25 basis points versus 35% of doing nothing policy-wise. At this point, even if there is a rate cut, at some point the market will realize that the reason the Fed cut rates is because the government is no longer able to deny or hide the economic slowdown and stagflation that is here. And this is truly bad news for the market. Also, this is going to fit right in with the changing in momentum, as we are likely to get a spike down to kind of keep us grounded a bit. And that spike down is going to be kind of hidden in all this FOMC noise, to where people are going to see it but not really think about it and kind of acknowledge it, so to speak. So I'm going to kind of do a little overtime, kind of talk through some scenarios here of how I see the day going. So I've got the levels up. I will post the levels in the description below the video, and you can always go to the Reddit group JMJ Investment Club on Reddit to find the levels. But the first thing that I'm going to talk about is the critical range. And that critical range today is going to be this 56.90 to the 56.63 area. And that's where I'm looking, or the target range down at some point. And we may not even get there until the actual announcement. Before I get into the scenario, let me point out some key levels I have marked on the chart. As you can see, there is a purple line here, and this is the upper edge of the weekly market makers expected move. It is 57.22 for the week. Now, this yellow line here is where we closed yesterday. That is yesterday's actual close. Now, up here is we have the intraday market makers expected move, and this is the upper edge. And down here, the purple line here is the lower edge of the intraday market makers expected move. Now, today is a little bit different. Every day I give you levels, and then every day I give you a chop zone. That chop zone is for our safety. It's that place where there's so much action going on that you want to stay out of, because you will literally get chewed up and spit out trying to put on positions in that area. It just doesn't make sense to go and try to trade within that area, because there's so much turnover in that area. And the reason today is going to be different is we have the FOMC, and I'm going to point out the area which is going to be abnormally large than the normal chop area. It's even bigger than what I have written in the description. But when it comes to the FOMC announcement, if you are within this range, you are in danger of getting chewed up. And that range is going to be from this 57.23 area up here all the way down to 56.90 here. This is that chop area that we kind of want to stay out of during the FOMC announcement. We want to let the spikes happen. So if you're in this area, you're there at your own risk, because there is a high chance of getting chewed up and spit out. And basically, if you get in, your stops will get hit. That's just the likely or high probability of trading in that area. All right. The announcement happens at 2 o'clock or 2 p.m. Eastern Standard Time. And until that time, the market is going to be in basically standby. And whatever the algorithms decide to do during this time is where and what we are going to do. And the likely scenario up until that 2 p.m. time frame is that we're going to kind of just maintain this area with some bearish chop here, kind of sticking around that previous close, and maybe even heading a little further down. But it's going to be a really choppy day going up into that announcement, and it should get us near or close to this important critical range that I have here. We should possibly get close to it at some point. And then the closer we get to the meat, it's like the market is pretty much going to go dead. We're going to be in this locked sideways position all the way up until that 2 p.m. hour. And probably the biggest probability that I see is we're probably going to get, if we get down to this critical range area, we're going to get the first spike down deeper into that area. And then we're going to get maybe another spike up, and then a spike down, and then for the rest of the day we're going to start pushing back up. that's pretty much how I see the price action happening during the FOMC announcement. And you have to be careful because we're going to get that dangerous spike right at 2 p.m. at the announcement, and then there's probably going to be another reaction kind of violent like that maybe 15 to 20 minutes later when he actually starts the the speech. Sorry, it's actually 30 minutes later, so maybe right at that 25 minute mark we get another spike when the actual press conference starts, and that's when we're going to start making the actual move, and that may be the move up here. That's how I see the first scenario, where we take off to the downside first, or just kind of meander down, die out, waiting on the actual meet, and then we get those spikes, the down, then up, and then maybe another down move, and then we start actual movement to where the rest of the day we kind of take off, and the algos kind of hijack us, and we stay on this steady trend up for the rest of the day, and maybe a decent part of the morning tomorrow. So that's how I see things happening. Scenario number one. Now, really quick, I'm going to hit scenario number two, where we're going to meander this time to the upside a good bit before, and then usually around lunch we're going to die out, and we're probably dying out right on that pop-up reversal area that I have till 2 o'clock, and then we're going to get the news at 2 p.m. and we're going to get a nice spike, and then a spike down, and then again 20-25 minutes later we're going to get another spike, and then we're going to start the trend for the rest of the day. That is scenario two. That is how things could play out. So these are the options that I am prepared for. I always like to think of trading with the if-then statement, or if-then move. If the market does this, then I do that. If the market does that, then I do this. So that is it. I hope this helped. Remember, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.